Hey traders, welcome to Price Plan Profit. My name's Melissa, and today I'm going to talk about a winning trade and a losing trade. But more importantly, I want to talk to you about what I learned from each of these trades. So let's get started. First, I want to talk about my losing trade. This trade was a loser, but it didn't have to be. And why do I say that? Because I made a mistake and I broke two very important rules that I have. The first rule that I broke was this: I went long above the PMZ. I chose QQQ calls at the money. I got a trim immediately, half of my position. The first rule that I broke was after trimming for half of my position, I want to have a break even stop. I did not. Instead, I watched price as it traded here at the bottom of the PMZ. And actually, on this candle, it gave me another opportunity to get out of the trade a winner, but I didn't take it because the bottom of the PMZ was acting as support. Then immediately, boom, down it went. Now the trade is no longer a winner and it is actually a loser. What went through my mind at this point was that price was at the lower liquidity chop level where I was expecting support. So I decided to stay in the trade and actually add back the allocation that I had trimmed out of in my buy zone down here once we made higher highs. So that's what was going through my mind. Now, I made the second mistake right down here. I entered on a higher low with a trendy turn signal. But what I didn't do right is because it was after the first hour of the opening bell, I should have bought a 1 day to expiration. Instead, I bought 0 days to expiration, meaning these contracts were expiring today. And there was only 2 hours left in the market. For the next hour and 45 minutes, basically, price did nothing but chop right here, which caused the theta decay to kill the value of my option. Now, I chose to go ahead and stop out here because I know that if brokers have to stop you out of an at the money or in the money trade themselves, they charge a huge fee to do that. And I didn't want anyone in the trendy room to get charged that fee, so I went ahead and exited here. Now, had I bought 1 DTE, this ad would have been a winner because I wouldn't have had to stop out of the trade and I would have had options that weren't expiring till tomorrow, and I would have been able to catch the nice rally that we had at the end of the day. So, the two mistakes I made: number one, I didn't have a break even stop, and number two, instead of buying extra time to expiration during the last 2 hours of the market, I chose 0 DTE. Big mistakes. And guess what? I'm human, I make mistakes, and this is a perfect opportunity to talk to you about the mistakes that I made, and hopefully you nor me will make those same mistakes again tomorrow. Now let's talk about the winning trade. I chose the Bank of America trade this week because it was a little different than what I typically do. Let me talk about it. The financial sector had been very strong, and I had a demand zone down here that I wanted to start a position and add to the position. I started the position here as price pulled back into the demand zone. We had a couple of days of nothing really happening, and then I added as price pulled back to the daily 21 and the 46.46 level. So now I'm in this trade. The problem is it's expiring in a few days. So I took heat down in here. But notice that my demand zone didn't break. We had a flush low. Price came down to the 50 SMA and buyers stepped in. The very next day, on the 17th of July, I said if the day is bullish and we stay in the demand zone, then I'm going to roll my contracts out to July 25th rather than closing out the ones that were expiring the next day. So that's what I did. This is a key part. I had open allocation, meaning I have a set amount that I will have at risk at any time on any trade. And I had budget to roll these contracts out 1 week. That's what I did. I would not have rolled the contracts out if the day was looking like it was going to close below my stop. But because it was bullish, we got back above the EMA cloud. I chose to roll them out for 1 week and was able to take profits on this trade. Now, here are the lessons and takeaways. Number one, when the day is choppy, take the profits and run. That's what I should have done on that QQQ trade. Number two, all trades after the opening hour must be at least 1 DTE. That was the second mistake I made in that trade, and it cost me. Number three, when running out of time to expiration, if you have the budget, meaning you're comfortable with adding the risk that it costs, and the chart is still intact and your stop level is not in jeopardy, then roll to a later expiration. All right? Awesome. I hope you found this content valuable. If you did and you want to learn more about how to read the market using supply and demand, please take advantage of the 30-day trial to the Trendy Trading Room at Simpler Trading. It's only $7. And check out my video on how I create simple trading plans and make sure that you have a plan before you enter a trade. And of course, keep an eye out for more videos to help you become a more structured, disciplined, and consistent trader. Be sure to subscribe so you're notified of new videos. And please, please, please like this video and comment a valuable lesson that you learned in your trading recently. I hope you have a great day and I look forward to seeing you in the next video.